Welcome to The Deep Dive, your essential briefing on the latest earnings calls.
Great to be here.
So today we're looking at MDB Capital Holdings, and their Q2 2025 earnings call threw up something, well, a bit paradoxical, wouldn't you say?
Definitely. Paradox is the right word. You look at the headline numbers and they're frankly pretty rough.
Yeah, exactly. GAAP EPS loss widened quite a bit, negative $0.83 compared to negative $0.46 last year.
And revenue, a big drop, down almost 80% year over year.
Ouch. About $2.3 million versus nearly $1.4 million. Net loss also ballooned to, $8.25 million?
That's right, up from about $4.8 million loss, primarily driven by, unrealized losses on securities they hold and just a lack of fee-generating deals closing in the quarter.
So on paper, it looks like a disaster waiting to happen for the stock, right?
You'd absolutely think so. Bad numbers usually equal a bad day for the stock.
But here's the twist. The stock actually closed up nearly 3% in the regular session.
And then jumped another 8.7% after hours following the call. That's pretty remarkable.
It really is. So the big question we need to unpack is, what on earth did management say that made investors basically ignore those numbers and pile in?
It seems to boil down to their strategic story, their pivot, and this whole public venture concept they're championing.
Right. This idea of being a launch pad for early stage, big idea companies, taking them public directly and supporting them afterwards. It's kind of a unique model.
It is. It's blurring the lines between venture capital and public markets, offering that VC-type potential, but with public market liquidity. And clearly, that narrative resonated more than the Q2 financials.
Okay, so let's dig into that strategy. What exactly is this pivot they're talking about? It sounds like they're adjusting course.
They are, and they were pretty upfront about it. They acknowledged that some of their earlier bets, particularly in deep tech and early life sciences without revenue, were maybe too early for the current market climate.
Which is fair. Those kinds of stocks have had a really tough time recently.
Exactly. So they're adapting. They're expanding the kinds of companies they work with. It's not just pure deep tech anymore.
So what are they adding?
They're specifically looking now to include profitable or near profitable growing early stage companies. Still aiming for that asymmetric return, the chance for outsized gains, but adding companies with maybe a clearer path in the near term.
Balancing the moonshots with something a bit more grounded, perhaps.
That seems to be the idea. Balancing the risk profile while still offering high growth potential and, crucially, that public market liquidity investors seem to crave right now. They're meeting the market where it is.
Okay, so talk us through some examples. What does this new pipeline actually look like? They mentioned Buda Juice, right?
Yes, the Buda Juice IPO. They filed the S1, which is that initial registration to go public. And the key thing here, it's said to be their first profitable company to go public via their platform.
Profitable? That's a big shift. What do they do?
They're an ultra-fresh, cold-crafted beverages company, apparently showing really strong growth, getting into major chains.
And management's outlook?
Pretty bullish. They actually threw out the comparison, the next monster beverage.
Wow. Okay, that's ambitious. But it definitely signals that shift towards proven business models alongside the deep tech stuff.
Absolutely. It shows a public venture model isn't just for pre-revenue science projects. It can work for growth companies, too. Broadens their appeal.
But they haven't given up on life sciences, have they?
Oh, not at all. But they've become much more focused. They're really zoning in on metabolic health.
The hot area right now with the GLP-1s and everything.
Precisely. Management explicitly called it the biggest opportunity of our time. They're talking a potential market size of like $200–300 billion. Dwarfs other pharma segments. Partly thanks to those new weight loss and diabetes drugs.
So it's a big theme. What specific companies are they backing in this space?
Well, they mentioned Paulex Bio. There's a private offering happening now. It's an oral diabetes therapy aiming to regenerate beta cells.
Regenerating beta cells, that would be huge if they can pull it off.
Potentially revolutionary, yeah. Funded at a $20 million pre-money valuation. They see near-term potential there.
Okay, what else?
Then there's NCTX. This is actually a new subsidiary spun out of Exosomes, which is a company MDB already took public.
Right, I remember Exozymes.
So NCTX is focused on biomanufacturing something called NCT to, get this, mobilize pathogenic organ fat. Basically targeting the bad internal fat linked to metabolic disease.
Interesting, very specific.
And one more they highlighted was GT Metabolic. They described it as having an unbelievable metabolic switch through magnet.
Through magnets. Okay, explain that one.
It sounds like it's for an incisionless duodenal bypass. So a minimally invasive procedure to treat obesity and type 2 diabetes, but using magnets somehow. They're reporting promising early patient data on diabetes reversal and weight loss.
So a few different shots on goal within that big metabolic health theme.
Exactly. Different approaches, but all targeting that massive market opportunity they've identified.
Beyond just the companies themselves, though, a big part of this public venture model has to be the investors, right? Getting people to actually buy into these early stage public companies.
Absolutely critical. And they spent a good chunk of time talking about expanding their investor community and distribution channels.
How are they doing that? Because that seems like a major hurdle.
Well, one significant step is a partnership with Keiretsu Forum MST.
Oh, yeah. They're one of the biggest angel investor groups out there.
Right. They're forming something called IPO Angels together. The plan is to build a syndicate to back maybe 2-4 deals a year, specifically targeting companies that are near profitability.
So linking up with established angel networks to bring deals that fit both MDB's model and what angels are looking for.
Precisely. And they noted the director there, Howard Lubert, really gets the public venture concept. It seems like a smart alignment, tapping into angels who might want liquidity faster than traditional VC allows.
Makes sense. Who else are they targeting?
They're also making a big push towards registered investment advisors, RIAs, and family offices.
Why them specifically?
The thinking is these groups are increasingly looking for alternatives to traditional private equity and VC. They want the potential upside, but also the transparency and, crucially, the liquidity of public markets. They're tired of long lockups and opaque valuations.
Yeah, you hear that a lot. The private markets have gotten pretty crowded and slow lately.
Exactly. So MDB sees an opening there. Plus, there are regulatory changes helping them.
Oh, like what?
Changes to the QSBS rules, qualified small business stock. Section 1202 specifically.
Right, that offers tax advantages for investing in small businesses.
Yeah, and the recent changes are quite favorable. They increased the asset limit for qualifying companies to $75 million, and the tax benefits can apply even for shorter hold periods, like 3 to 5 years.
Ah, so that makes investing in the types of companies MDB brings public potentially much more tax efficient for investors.
Definitely. It's a significant sweetener, especially for those RIAs and family offices managing taxable money. It directly aligns the regulations with their model.
Are they looking at newer platforms too? Like reaching retail investors?
Seems like it. They mentioned exploring partnerships with new age distribution platforms.
Yeah.
Things like Reg A Plus offerings, which can reach non-accredited investors too.
Okay.
And potentially even platforms like Robinhood, recognizing that these platforms are becoming important curators for a new generation of investors.
So really trying to broaden the distribution network across the board.
That's the goal. Get these public venture opportunities in front of more eyeballs, from angels to institutions to maybe even retail.
Okay, shifting gears a bit, what about MDB's own value and value for their existing shareholders? They hold stakes in companies they've already launched, right?
Yes, and that was another key point. They currently own about 4 million shares of Exozymes. They put the value of that holding at around $40 million.
Okay.
Plus, they have shares and warrants in Heartbeam, another company they helped launch.
Yeah.
And they wholly own their IP intelligence subsidiary, PatentVest.
And what's the argument there?
Management's point was that MDB's current enterprise value, around $35 million, is actually less than the value of just their Exozyme shares and cash on hand.
So they're basically saying the market isn't recognizing the value of their holdings, let alone the core business or PatentVest.
Pretty much. They see a disconnect, suggesting there's unrecognized or buried value in MDB stock right now.
And they have plans to unlock that value.
Yes, the long-term plan, likely targeting 2026 when they hope market conditions are better, is to distribute assets to shareholders.
Distribute how?
Specifically, distributing their Exozyme shares and spinning out PatentVest as a separate entity. They believe PatentVest's value in particular isn't reflected in MDB's current share price.
A spin out. That could be a significant catalyst if PatentVest has real value on its own.
Could be. And they stress that current MDB shareholders will keep getting priority access to participate in new offerings they bring to market. So trying to reward the existing base.
Okay, so looking forward then, what are the near-term expectations?
They'd expect to close some financings in the second half of this year, 2025, which should help reduce or ideally eliminate their cash burn. That's important.
Definitely need to shore up the finances.
And they want their portfolio companies to start showing tangible progress, hitting some near-term inflection points over the next, say, 90 to 120 days. Proof that the strategy is working.
And there's an event coming up.
Yep, an investor summit planned for September 4th. So that'll likely be a key date for updates and maybe more details on these plans.
All right, let's pivot to our favorite segment. Time for some outrageous but plausible trade ideas based on this call. And just to be crystal clear, this is purely for informational purposes, folks. Definitely not financial advice.
Always do your own homework. These are just thought experiments.
Okay, idea number one, the metabolic pivot play. We just talked about their huge focus shift to metabolic health, right? The CEO called it the biggest opportunity.
Right, they're going all in on that theme.
So the idea is, go long MDB Capital Holdings, MDBH itself, betting on this pivot. But concurrently, take a targeted short position in a basket of traditional, maybe undifferentiated oncology biotechs.
Interesting. A pair trade. Long MDB, short old school oncology. What's the thinking?
The logic is MDB is actively curating what they believe are unique, high-potential, 100-bagger type companies within metabolic health, getting in at super reasonable valuations. If any of those hit, MDB stock could get significantly re-rated.
Okay, makes sense. Capturing the upside if their curation works.
Exactly. And the short on the older oncology names, that acts as a hedge. It hedges against that general investor hesitation towards deep tech life science that MDB is actually trying to move away from in some ways. You're betting MDB picked the right new sector, and capital will eventually flow from the old crowded spaces to this new metabolic frontier they're targeting.
So betting on MDB's specific curation skills within a broader sector rotation, it's definitely playing a theme. High conviction required, I'd say.
For sure. Okay, second idea. The IP as a service catalyst arbitrage. This one focuses on PatentVest.
Ah, yes, the planned 2026 spinout. Management was pretty explicit that its value isn't recognized currently.
Exactly. So the trade here is long MDBH again to capture that currently unrecognized PatentVest value ahead of the spinout. But pair it with a long-dated call option on a high-growth, pure-play, AI-driven legal tech company, assuming you can find one with decent liquidity, of course.
Okay, so long MDB for the spinout catalyst, and long calls on AI legal tech as a broader theme play. Explain the synergy there.
It's two-pronged. First, you capture the value unlock when PatentVest becomes its own public company. The market hopefully recognizes its standalone worth then. Second, you ride the bigger wave of AI transforming the legal sector, especially intellectual property law, which is PatentVest's playground.
So PatentVest benefits directly, but you're also betting on the whole sector lifting off.
Right. And the AI legal tech call option acts as a bit of a hedge, too. If the PatentVest spinout gets delayed, the broader AI legal tech theme should still theoretically appreciate. You're essentially arbitraging PatentVest's currently depressed value inside MDB against the future potential of its core market, amplified by AI.
Clever. Combining a specific corporate action catalyst with a broader macro tech trend, you're trying to capture value from multiple angles there.
That's the idea. Again, purely hypothetical.
Naturally. So let's wrap this up. MDB's Q2 numbers were undeniably challenging.
Yeah, no hiding from that. Wider loss, revenue down significantly.
But the earnings call itself painted a picture of confidence, a strategic pivot in action.
Definitely. They're diversifying the pipeline, bringing in profitable growth like Buda Juice, while doubling down with intense focus on metabolic health.
And they laid out that plan to unlock value via distributing exozymes and spinning out PatentVest. Plus, all the efforts to expand investor reach, leveraging things like the QSBS changes.
It really suggests a company that's actively adapting, trying to position itself for what they see as the next wave, this public venture opportunity.
Which leaves us with the key question for you, the listener, to ponder.
How quickly can MDB actually turn this pipeline, this strategy, into consistent fee generation? Will investors keep giving them credit for the promise based on the story?
Or will patience eventually run out if the financial results don't start catching up to the narrative? That's the balancing act they're navigating.
Absolutely. Food for thought. And one final crucial reminder from us.
The views and ideas discussed today are purely informational. They are absolutely not financial advice. Always do your own research and consult with a qualified financial advisor before making any investment decisions.
Especially with microcap and early stage companies like these, the risks are significant and you could lose your investment. Be careful out there.